Welcome and thank you for joining us. The topic for today is China, and we're so fortunate to have an expert in the subject here with us today, Timothy Beardson, the author of a major new book on the future of China. It's titled Stumbling Giant, The Threats to China's Future. Timothy, such a pleasure to have you. Welcome.
Thank you very much indeed, Oliver. It's very nice to be here.
Always a pleasure to talk to you. Before we get into the topic of China, tell us a bit about what motivated you to write the book in the first place.
Well, I've lived in Hong Kong for 35 years, and I've been visiting China for 35 years. So I've taken a great interest in the developments since reforms really began in 1978. We've seen so many changes in China, and it's been a privilege for me to even participate in some of those developments, the opening of the Shanghai Stock Exchange, the opening up of capital markets in China. And so I've taken a deep interest. And the economic growth of China the first 30 years really was something quite outstanding, dramatic. Since then, really, from about 2000, we've had something of a slowdown in the reforms in China. And now I think it's a subject of considerable interest where China's going to go from here. 3 decades of 10% growth is extraordinary, but is it going to continue, or is the trend going to change? And my book is really looking forward and saying, where's China going to go through the balance of the 21st century? And that's what caused me to write the book, a deep personal interest in the subject.
Now, most of the literature on the subject of China tends to be bullish. Your book takes a more balanced view on the prospects for China. Tell us a bit about that view of yours, and what are, in your view, then the key issues for China's future?
Yes, I think there tends to be a temptation amongst economists and others to believe that the best way of anticipating the future is to extrapolate current trends into the future. But of course history is full of trends which change. And what I've tried to do is to look at where there might be changes as well as continuities in China's future. So I've tried to look at this in a very wide range of different perspectives. I've looked at China's education, I've looked at politics, I've looked at the environment, I've looked at demography and other social factors. I've looked at the influence of history on the Chinese character. I've looked at the role of language, culture, morality. So it's a fairly integrated and multidisciplinary look at China's future. And the conclusions that I gradually came to was that there are so many challenges that will arise to confront China during this century. And some of those challenges are so serious that I think it is highly improbable that China will eventually replace the United States as a superpower in this century.
Now, if we take some of these issues and look at them in more detail, I believe one of the issues that really spoke to me in the book and revealed some perhaps surprising facts is the issue of demographics and how negative that factor is to China's future. Could you tell us more about the demographics in China and how you see that issue?
Well, of all the major problems that will arise to challenge China in the coming years, for me the biggest challenge is demography, because demographic change tends to be glacial, very long term, very slow, but with highly serious implications. And for me, that makes it an insoluble issue. And demography for China presents 4 separate challenges. The first one is that China, over the last 30 years, has benefited enormously from a youthful population a fast-growing workforce, which has meant that labour rates have not changed for years and years, allowing China to become the world's low-cost manufacturer for almost every product. That situation is now changing, and the principal reason for that is that from the early 1970s to now, there has been a 40% fall in the annual number of births in China. That means we're having fewer and fewer people joining the workforce. And as a result, wages are now beginning to rise at double digits, harming China's competitiveness and forcing it to move to a new economic model, away from low-cost manufacturing towards, ideally, an innovation-driven economy. But unfortunately, China is finding it extremely difficult to make that change. So that's the first challenge. The second demographic challenge is that China is a fast-aging society. At the moment, there are just over 100 million Chinese above the age of 65. But by 2040, there are going to be over 300 million. So a tripling of the over 65s without the population tripling, the workforce reducing, old age people growing, and that means dependency ratios becoming more and more unhelpful. More people have to be looked after by fewer workers. And there are various implications of this. For example, the traditional model in Chinese society has been that young adults look after their elderly at home or nearby, and it's not a burden on the state. And at the moment, only 1.5% of over 65s are in institutional care. But the shape of the Chinese family is changing. A young adult male today could reasonably expect soon to have 2 live parents and possibly 4 live grandparents, and his wife the same, which means a couple could potentially have 12 elderly to consider, and quite likely no siblings. So this presents a real challenge in a fast urbanizing society where people are living in small apartments, and they're migrating from countries to cities. They're not there for their grandparents in the countryside. So I would suggest that by 2040, we probably are going to be looking at 1/3 to 1/2 of the elderly needing to be in institutional care. And this means going from 1 million to possibly 150 million. The budgetary implications of that for the Chinese state are quite considerable when you take into account that China may be the second largest economy in the world, but it has a budget which is not that different from that of France. So the financial ability to make these major moves in developing, for example, institutional care for old people on that scale, mean making tough decisions, like perhaps not expanding the military or not doing something else. Tough choices. So that's the second challenge I see for China. The third one is that of gender disparity. Because if people are having fewer children, they tend, in a society like China, where there's a large rural component, there's a Confucian tradition, they tend to have preferences for male children. And there are practical aspects to this. A female child will marry into another family and is thought to have joined that family. A male child tends to look after the family farm and take more responsibility, it's thought, for his elderly relatives. So people tend to have a preference for a boy. And so it's not surprising that steps have been taken over the last 20 years, which have resulted in, on average, 6 boys being born for every 5 girls. And 20 years of that demographic means that we know that in the next 2 decades, there are going to be between 40 and 50 million men who will not get a wife. And more than saying 1 in 6 men will not get a wife, we can be a little bit more precise. Because women tend to make a lot of the choices in social life. They tend to marry men who are rather better off, who are rather more intelligent, and maybe rather better looking. And so we can say fairly clearly that perhaps 1 in 2.5 men who are poorer, less intelligent, and uglier are not going to have a wife. And these young people will be going into the cities. They'll be increasingly involved in committing crimes and causing instability. And this is already showing up in the crime statistics in major Chinese cities. So we should be looking for increasing instability in China, which is bad for the economic development of the country. The fourth demographic challenge which faces China is the development of the overall population of the country. At the moment, China's population is still growing. There's increasing longevity, slightly better health care, but by the early 2020s, this is really going to be very, very slow, and China will be overtaken by India to become the most populous country in the world. And that will have an economic impact, because virtually every multinational company in the world by now has realized that it needs to have a strategy for China. It needs to know how it's going to invest, how it's going to trade, how it's going to engage with China, because it's the biggest country in the world. They can't ignore it. By the 2020s, most multinationals will have realized that they need to engage with India. How are they going to do it? What is their strategy going to be? So you'll start to see an increasing flow of foreign direct investment into India, and that'll mean some diminution of attention to China. But by the late 2020s, you'll see China's total population reach about 1.4 billion and then start to fall. And the forecasts, of course, vary in what that means. The most benign forecast is that of the United Nations, which tends to be very influenced by what national governments say to it. And their forecast is that the Chinese population will, by the end of this century, fall by 1/3 to about 950 million. Other more independent forecasts suggest anywhere up to a fall of 2/3 in China's population to maybe down to about 550 million. These are big changes. And the point that I'd like to make is that I can't think of any society in human history which has had a consistent fall in population and has yet been able to sustain high economic growth rates. So I would suggest by the 2030s we should be looking for China to be exhibiting more like European economic growth rates. And the implication of that is anything transformational, anything major that China needs to take on and deal with, needs to be dealt with early while it still has the semblance of high growth rates, while it can afford to make transformational decisions about its society and its economy. And there are many of those decisions which need to be made. So there is a need for early, deep and radical reforms before China's growth rate subdues.
Well, that sounds a lot like some of the issues that Western Europe is facing, and clearly alludes to that difference to the United States, perhaps as it was rising to the status of a superpower where the demographics were really a tailwind and the population was growing, unlike your prediction for China that it will fall substantially over the next decades.
There are differential demographies around the world. And the United States is having modest increase in its population through the 21st century, principally led by immigration. Western Europe largely is going to experience falls in population. East Asia is definitely experiencing falls in population. India is going to have modest growth. Africa is still having good growth. So the world is fragmented into different demographic futures, and therefore the impacts economically on different parts of the world are differential. Well, now there are about 4 Chinese for every 1 Americans, but by the end of this century it's going to be closer to maybe 1.2 Chinese for every 1 American. So a major change in the strategic outlook for major countries.
Now I want to come back to that second challenge when it comes to the demographic issues that you talked about. I'm really curious to hear from you then, what are perhaps some of the solutions here? Is this really inevitable when it comes to, let's say, the elderly care and how that is a challenge for China? I'm thinking as an investor, well, that could be an opportunity for private capital. Or how do you see that when it comes to the challenge of the elderly in China?
Well, I think the demographic numbers can't really be changed. They're pretty much set. And these dependency ratios are starting to look more and more difficult. Now, the smaller number of working people versus the larger number of people who need to be maintained, the ratios are getting less and less good. But it does create opportunities. For example, if the Chinese authorities were interested to open up some of these social areas for foreign investment and foreign expertise, we could find some quite interesting solutions, perhaps that could be adopted from experiences of other countries, to try to take the burden as much as possible from going onto the public sector. Because it really is important to appreciate how small China's public sector finances are. That the result of that is that it has to make very difficult choices all the time. And the reason for it is that although we see Chinese companies all over the world exporting, winning business, they often do it by being highly competitive in their pricing. So they'll underprice somebody else to win business, but at the cost to themselves of making very, very little profit. So Chinese industry overall is nowhere near as profitable as you might imagine for the scale of the country. And therefore there's not that much tax being paid to the government budget. Of course, there's also tax evasion to an extent as well, quite a lot of it, but the smallness of corporate profitability should not be underestimated. And therefore you have a budget which is substantially smaller than America's as a percentage of the Chinese economy. Therefore, all the time, education is getting less than it should, healthcare is getting less than it should, and I do raise the question whether China is going to be able to develop aircraft carriers and also elderly care homes.
Well, you also described this tension between the state sector and the private sector, and there's some really startling statistics there, and it reflects on the stock market in China as well. Could you help us understand some of those issues better, especially as it relates to foreign investors when they look into China? What is perhaps less well understood?
Well, I think there are 3 things that are not very well understood that I could quickly touch on. One is that the reported growth of the Chinese economy for the last 30 years has averaged around about 10% a year. Now, those figures aren't totally accurate, but they are broadly representative of what has taken place. So whether it's 8 or 9 or 10 doesn't really matter. What we do know is that China for 30 years has grown very rapidly and increased the standard of living of its people. But the private sector in 1980 was 3% of the Chinese economy. Now it's approximately 70%. So if the economy has grown by 10% a year, the private sector has grown by over 20% a year for 30 years. So you may be surprised when I say that the banking system gives 70% of bank credit to the state sector and quite a lot to local government and very little indeed to the private sector. So private sector companies have had to borrow money from relatives, from the underground banking system, or just grow out of operating cash flow. There's been a misallocation of bank credit on a major scale. The banks have been supplying credit to the wrong institutions for decades. The second point is foreign investors have been quite attracted to the China growth story and have said, well, let's invest in the Chinese stock market. So it may be surprising for them that this week the Shanghai stock market index closed below where it was 12 years ago. In other words, the stock market has in no way reflected what the economy has done. And there's one very clear reason for that 86% of the value of the Chinese stock market is state enterprises, not the fast-growing private companies, because they have been deterred from accessing the capital markets. There have been other priorities for the government institutions which control access, and so they, by and large, found it very difficult. So when the private sector is growing at over 20% a year, it's denied access to bank credit and to capital markets. We might ask the question, what would have happened over the last 30 years if they'd had normal access to funding? Perhaps the Chinese economy would not have grown at 10% a year. It might have grown at 15% a year. And I would strongly suggest that if China is facing a period of slowing growth rates, it really has to deal with this dysfunctional financial system and try to make sure that the companies which are going to be capable of growing get adequate access to credit and capital markets. Otherwise, it will reduce the chance for China to avoid a substantial slowdown. And the third point I make about the financial system in China is that of foreign exchange reserves, because this is an issue which really attracts the attention of many foreign observers. $3.5 trillion of foreign exchange reserves makes China appear very strong and powerful. Surely they can bail out Citibank or come to the rescue of the world financial system. And I think this overlooks how foreign exchange reserves are actually created in China. They're created through two different actions, essentially. One is that Chinese companies export more than they import, and so by the end of the year they've accumulated foreign exchange reserves, which they're required to sell to the central bank. So the central bank acquires foreign exchange reserves and pays out Chinese currency to those export companies. The second way in which foreign exchange reserves are created in China is that the Chinese authorities intervene in the foreign exchange markets regularly. America will say this is to depress the Chinese currency. The Chinese would say it's to stabilize it. But whatever we call it, China is expending Chinese currency on a daily basis and accumulating foreign exchange on a daily basis. So, as a result, now, 2013, China has $3.5 trillion of foreign exchange reserves, dollars, euros, other things. But we ignore the fact that it has spent almost $3.5 trillion in acquiring those things. Now, China didn't have 3.5 trillion of domestic currency 30 years ago. Where's it come from? They haven't had wholesale recourse to printing money. What they've done is essentially to issue domestic bonds to insurance companies, banks, the public. And secondly, they require the whole banking system of China to place prudential reserves with the central bank. Those reserves are then used for the sort of exercise we're discussing. So China owes something like 3 trillion plus of domestic currency liability and owns 3.5 trillion of foreign currency asset. Now, one implication immediately is that the rate on treasury bills in America is lower than the rate it pays to domestic bondholders in China. So it's losing about $66 billion a year on the interest carry. But any 10% move upwards in the renminbi is a loss of $350 billion to China. And to have 3.5 trillion of foreign assets and 3.5 trillion of domestic liability means you are hoping very strongly your currency is not going up, but you have arguably the largest highly leveraged and undiversified hedge fund in the world. And I would argue this doesn't make China strong. It makes China very vulnerable. And my suggestion is that they should look at ways to unwind this extraordinarily vulnerable situation.
Now, from the perspective of a foreign investor, then there are a lot of landmines when it comes to investment opportunities in China, and this fragility in the system that perhaps most are not able to recognize. Now, you ran a successful business. You were one of the pioneers in China, in Asia. You founded Crosby, which became the largest independent investment bank in the Far East. You've spent, I believe, 35 years in Hong Kong and in Asia. I'd be curious then, based on your successful career, if you could share with our audience some advice to business people, to foreign investors, how they can increase their chances of success when it comes to starting a business, investing in China.
Well, a lot will depend on whether China decides to re-engage with radical reform. If it does, then clearly there are a number of measures which could be taken, such as breaking up the monopolies or oligopolies of state sector enterprises, the free oil companies, the free telecoms companies, and opening up to competition. A lot could happen in terms of making bank credit more widely available, ending the tiered interest rate system where the private sector pays high interest rates, the state sector pays low interest rates. All these things could be broken up, opened up, reformed. Now, if we could see a lot more high-quality domestic companies go to the stock market, then it would have a number of positive results. Not just would it widen the choice for foreign and domestic investors so they could invest into good companies and private ones, as well as perhaps slower growing and state companies, but also, in order to have an IPO, companies are required in a way to change their mentality. They then want to show the highest possible profitability to get the highest multiple when they go public. Whereas at the moment, if you're a private company and you can't come to the stock market, your motivation is to show the lowest possible profit so you pay less tax. So it's very healthy for the state's budget if more of the private sector can be got on to the stock market. So there's a virtuous circle here. reforms can lead to many positive results for China if there's the courage to engage in early reform.
And you were involved in the setting up of the Shanghai Stock Exchange back in the day. I'm wondering if I remember correctly, the Shenzhen Stock Exchange, of course, does list a lot of these smaller companies, unlike the Shanghai Stock Exchange today, which are, in a way, the engine of growth of the Chinese economy. Do you see some of those trends that you talked about actually taking place, where there is an encouragement of more private companies listing, and some of the other examples of progress in that respect, or is that all wishful thinking?
Guangdong province in southern China has generally been a little bit more reform-minded than northern China, a little bit more open to fresh developments. But if we're talking about China as a whole, we have to think in terms of the big picture, the broad scale. And yes, there is a market for small companies, but it's not on any scale. So we really need to see major developments if we want to see major changes and major improvements. And we're not seeing major reforms. We've seen scarcely a reform in China since 2000.
I want to move to another important issue, which is education, and you discuss that in your book extensively. You're also involved here at Oxford with bringing poor Chinese students to be able to get an education at Oxford. Tell us a bit about how you see the problems of education in China, which is so a topic that is so fundamental to economic progress longer term.
Yes, if China is going to be able to make the transition to becoming an innovation-led economy, it really has to start, I believe, by reforming its education system, because all the way through there are bottlenecks and problems. China doesn't have a university in the top 100 in the world, and yet it's the second largest economy. The entrance examination to Chinese universities, the national exam called the Gaokao, is driven by an approach based upon rote learning, learning the answers to the questions. Question 27 has this answer, you have to learn it. But this doesn't encourage the sort of critical thinking that we're familiar with in the West. And I believe that China must foster critical thinking and have less attention on rote learning. There's nothing wrong in learning facts, but you can't base an education system entirely on just learning data. You have to learn how to deal with data, how to interpret, how to analyze, how to judge it. And it's those skills which are missing, and therefore they're missing in the university system as well, because of the way people enter universities. And also, there's been an explosion in the university system. I mean, over the last 8 years, China's opened a university every 3 days. And this is a nonsense. In the 1990s, there were 600,000 students at Chinese universities. There are now 7 million. So it does not surprise me at all that graduate unemployment, actual graduate unemployment, not stated unemployment, actual unemployment, is around 45%. And secondly, that the average graduate salary on leaving university is less than the average migrant labourer's salary. Because there are simply far too many graduates, far too many universities, appalling teaching. This really needs to be reformed. And China's not alone. And we're seeing similar trends in Korea, in England. Over the last 5 years, a third of all Korean graduates have ended up working on assembly lines. which isn't what they thought they were going to university for. Political leaders all over the world have come to the conclusion that it pleases their public to say that their children will become university graduates. The problem is that the economies around the world don't want half the population to be university graduates. There's no need for them, and the economy is a ruthless employer. And so we're getting a lot of unemployed graduates, and it's very sad to see that destruction of young people's aspirations because of political mismatches of resources.
When it comes to education, I really want to delve a little bit deeper into it because it is so fundamental to also that innovation that you spoke about when it comes to really driving long-term economic growth, and certainly is also one of the distinguishing attributes of the US, which has made it so successful over the years, is that innovation, thinking about Silicon Valley, for example. Give us a sense of how you see that issue with regard to China and to what degree it is limiting real economic growth, and what are perhaps the solutions?
Well, I think if China can't continue as a cheap manufacturing country, it has to find another destiny, another economic model. And where some people talk about a consumer-driven economy being an alternative, I don't see that happening because of the need for high consumer savings in China, because of the lack of any social network, any welfare system of sufficient breadth. So I think the only option is to move towards a knowledge-based economy, innovation-driven. The problem is there's very little evidence of it happening. China has patches of excellence, supercomputers, maybe now 3D printing, genome work. There are some areas where it's really very, very good, but these are patches of excellence in a really grey picture. If you look at what are called China's high-tech exports, 83% of them are produced by foreign companies operating in China. And of course, as we know, foreign companies are very jealous in preserving their intellectual property. They don't want it to seep out into the general economy of China. So it's not having any particular beneficial impact on China's levels of technological knowledge. Chinese science has a culture of deference and hierarchy. The most senior scientist in the room has to be regarded as the best one. There's no idea that the young man over there might actually be a better scientist. This deference is dampening the creative instincts in Chinese science. So we need to think of some cultural changes in how science is managed and incentivized. Also, Chinese patents have grown enormously over the years. China has got the idea that if it needs to be a high technology society, it has to be granted a lot of patents. So that's beginning to happen. The problem is most of the patents in China are for very modest, incremental developments on existing processes. This isn't true innovation. And the same can be said for another driver that China has seized on, which is how important it is to produce many scientific papers. China now produces huge volumes of scientific papers every year. But on a per paper measure of citation by other scientists internationally, there are 200 countries whose scientific papers are more cited than China's. So lots of papers, little respect. So from a number of different angles, there are clearly real problems in how to move forward. One area that is a distinct weakness for China is this culture of plagiarism, where academics copy each other's papers to put in their own thesis. Now, it happens in many countries around the world, but I think it happens on a more pervasive basis in China than it does elsewhere. So in so many different ways, China isn't getting there. And one of the things that's measured every year is the percentage of GDP that's devoted to research and development. And of course in America it's 2.5%, in Japan it's 3%. And China set this target of getting to 2%, but it kept failing to hit the target. It doesn't make its targets very well in the R&D and scientific area. And then when you look at what the money is that's being spent in research and development in China, we're told that 70% of it is by the business sector, but this isn't really broken down. And when I have done my calculations, it seems to me that the business sector is predominantly state enterprises carrying out non-commercial work on behalf of the state, not commercial, market-driven work for their customers. And probably another 25% is multinationals doing research in China to improve their products for the Chinese consumer, so quite specific work, and not allowing that research to filter out through society, and so not really benefiting China's technological levels. Probably only 10 or 12% of R&D in China is done by the Chinese private sector, whereas in America it's something like 60 to 70%. So that's a fundamental difference, not only in how much money is being spent on research, but in what kind of research is being done, and therefore what results we might expect. If it's the state that's mostly spending the money, we're not going to get market-driven results, by and large. So this is fundamentally different from the way research works in the United States. So if it's going to be done differently, we're going to expect different results. And so far, we are getting very different results from research spending in China than we get from research spending in America.
I really love the fact that you're giving us a lot of statistics, numbers, and that makes me think actually when it comes to a debate on China, there are a lot of numbers that are being thrown out by various people, and I'm curious to hear from you when it comes to the research behind your book. Give us a sense of your experiences in gathering, analyzing data related to China.
Yeah, I think that the main thing that I can say is that most of the data relating to China are frail. You mustn't treat them as being very precise. I feel very sorry for traders who see that the Chinese economy has just reported 7.42%, when even the 7 is not clear. And the revisions that come later, as is often the case in other economies around the world, we're quite used to China revising quite significantly these numbers later on. So having to react quickly to data that you know are frail must be rather depressing. And even the Chinese government does not know very accurately the data in China. It's not as if there's a conspiracy to keep it private. And the problem is that the data are pervasively inaccurate. They may be close to the truth or a little bit further away, but they're all pretty inaccurate. So we know we're dealing with big grey areas and we have to make broad judgments. We can't be surgical in our description of situations. For example, the Chinese government likes to say, we must preserve 8% growth in order to protect employment. Well, first of all, of course, employment is a nominal number and economic growth is reported as an inflation-adjusted number, but the number of China's inflation rate is a fairly inaccurate number. Also, if you look back over the years, there may have been some loose relationship 15 years ago to the GDP growth number and a growth in the number of jobs created each year. Maybe it even was somewhere like 1% for 1% for a magic short period. But then gradually these have become less and less linked, to the point that today there is virtually no linkage. You can have a reported growth rate that's really quite high and virtually no growth in jobs at all. So we have to get away from thinking that there are these axiomatic linkages, and even the Chinese government believes this, because China is a country which has at the same time both deep unemployment and at the same time serious labour shortages because of a rather dysfunctional educational and university system. You've got people who are almost unemployable in the rural areas. Big pools of unemployment, and you've got a shortage of factory workers in the urban and coastal areas. So lots of mismatches that affect the economy. But if you take the national unemployment number of 4%, it's been 4% for, I think, over a decade. But during that period, after the 2009 Western downturn, I think China's unemployment rate in reality was well above 16%. But the reported number was 4 because it only counts people who have an urban identity card. Therefore, it doesn't include rural migrant labour in the cities. It doesn't include people who've never worked before. It doesn't include people below or above certain ages. It doesn't include anybody who's given up looking for a job. So it's actually a very loose figure that doesn't move very much. It doesn't tell us much. So many of the data are not really very helpful, and we really need to re-look at statistics in China, because accurate statistics do help us to manage an economy better.
Now, we've touched on some of the issues that you raise in the book. Of course, the economy, education, the demographics. We don't have the time to discuss and give justice to all of the issues that you raise in the book. But I think it would be really helpful if you could give us perhaps a brief summary of how you then see the future of China and how these issues are affecting the prospects for China. How do you see China getting on a more sustainable path?
Well, in the 1980s and 1990s, China was the fastest reforming country in the world. It produced outstanding results and tremendous reforms that unleashed energies and unleashed developments. But from about 2000 onwards, there's been a more timid leadership, and yet there has been the problem that further reforms came with a political cost. And so the combination of harder to enact reforms and more timid leaders has meant that reforms pretty much ground to a halt. Now, a dozen years later, we're at a stage where growth rates are clearly falling, and on my argument will fall a lot further over time. And yet China faces major problems, a devastated environment, a non-producing education system, a dysfunctional financial system, all these issues which need attention and need financial attention. So this book is really a call for reform. It's a call for China's leaders to re-engage with the reform process, because unless we can have reforms which are deep, early and radical, China is going to see its growth rates whittle away very steadily, and it's going to be unable to address the reforms of the challenges that it faces. It's going to cost a lot of money to clean up the Chinese environment. It's the worst of any major economy in the world. It's going to cost quite a lot of money to put right the education and scientific system. But these things need to be done if we're going to get China into a new and more successful economic model. So there are a lot of things that need to be taken on, a lot of challenges, but they would require early attention by a brave, committed and far-seeing leadership. And unfortunately, one of China's problems is after the Cultural Revolution, there was such a reaction against one-man rule that the whole system has been restructured as a collective system in which many, many people, thousands of people, have a say. And while that's understandable, it makes it really difficult to change China. China is not a dictatorship. We have President Xi and Mr. Li Keqiang, the new Prime Minister, but on their own, they can't just change China. A whole political leadership system of hundreds and hundreds of people have to share a vision of re-engaging with reform. And it's not clear to me that the leadership of China overall is willing to make that re-engagement.
Well, on that note, Timothy, I want to thank you so much for sharing your insights with our audiences.